What if Nevada's glittering promise of affordable homes and desert dreams turned into a financial sinkhole? In 2025, the Silver State's real estate market is flashing warning signs, with some cities sliding into a housing crash that could trap unwary buyers. Soaring insurance costs, bloated inventories, and vanishing investor interest are shaking markets once buzzing with opportunity. Could your next home purchase be in one of these danger zones? Stick around as we count down the 10 Nevada real estate markets crumbling fast, revealing why you should think twice before buying. You won't believe which city tops the list. Number 10, Pahrump. Tucked in the shadow of the Spring Mountains, Pahrump once lured buyers with its promise of affordable desert living and wide-open spaces just an hour from Las Vegas. But in 2025, this rural outpost's real estate market is stumbling like a tumbleweed in a windstorm. Known for its quirky charm and low-cost homes, Pahrump is now grappling with economic and environmental challenges that make it a risky bet for homebuyers. Let's dive into why this desert town's housing market is cracking and why caution is key. Pahrump's economy leans heavily on small businesses, agriculture, and some tourism, with a median household income of $49,000, well below Nevada's $65,000 average. During the 2020 to 2023 housing boom, median home prices surged 50% to $340,000, driven by retirees and investors seeking affordable alternatives to Las Vegas. In 2025, prices have dropped to $305,000, a 10.3% decline per local MLS data. Inventory has ballooned by 55%, with 1,100 active listings, compared to 700 in 2023. Homes now linger for 75 days on average, up from 22 days during the boom. A major issue is environmental strain. Nevada's worsening water scarcity hits Pahrump hard, with new homes facing utility hookup fees as high as $20,000. Homeowners' insurance premiums have spiked 40% since 2022, averaging $4,200 annually due to wildfire risks and extreme heat that drives cooling costs to $300 monthly in summer. Property taxes at 0.8% of home value add $2,400 yearly for a $305,000 home, squeezing affordability for locals with limited high-paying job prospects. Investor activity is also drying up. Pahrump's short-term rental market, once buoyed by proximity to Las Vegas, has seen a 12% drop in bookings in 2024, prompting a sell-off. About 20% of listings are investor-owned, many priced below purchase value, flooding the market. Pending sales are faltering, with 22% of deals collapsing due to financing hurdles or buyer caution. Pahrump's rural charm and affordability still draw some, but its housing market is buckling under oversupply, rising costs, and economic limitations. Up next, a city where economic shifts and natural risks are rewriting the real estate story. Any guesses? Number 9, Mesquite. Nestled along the Virgin River, Mesquite once sparkled as a desert oasis for retirees and golfers, its lush fairways and affordable homes drawing crowds seeking a quieter alternative to Las Vegas. But in 2025, Mesquite's real estate market is fading faster than a desert sunset, with warning signs that make it a risky bet for buyers. From economic dependence on seasonal tourism to environmental pressures, this small city's housing boom is unraveling. Let's break down why Mesquite's market is cracking and why you might want to steer clear. Mesquite's economy hinges on tourism, particularly golf resorts and casinos, with a median household income of $52,000, trailing Nevada's $65,000 average. During the 2020 to 2023 housing surge, median home prices soared 55% to $375,000, fueled by retirees and investors eyeing short-term rentals. In 2025, prices have slipped to $335,000, a 10.7% drop, according to local MLS data. Inventory has surged 60% year over year, with 900 active listings compared to 550 in 2023. Homes now sit unsold for 80 days on average, up from 20 days during the boom, signaling a sharp slowdown. Environmental challenges are a major factor. Nevada's ongoing water crisis hits Mesquite hard, with golf courses and new developments facing strict water restrictions. Utility hookup fees for new homes can reach $22,000, deterring buyers. Homeowners' insurance premiums have jumped 42% since 2022, averaging $4,300 annually, driven by wildfire risks and scorching summer heat that pushes cooling costs to $320 monthly. Property taxes at 0.8% of home value add $2,700 yearly for a $335,000 home, straining affordability for retirees on fixed incomes. The investor pullback is another blow. Mesquite's short-term rental market, once thriving due to its proximity to Las Vegas and St. George, Utah, has seen a 13% drop in bookings in 2024. Nearly 22% of listings are investor-owned, many selling at a loss, flooding the market and depressing prices. Pending sales are crumbling, with 23% of deals falling through due to stricter lending standards or buyer hesitancy. Mesquite's golf courses and serene vibes still charm, but its housing market is buckling under oversupply, rising costs, and reliance on seasonal tourism. Number 8. Fernley Tucked. Along the Truckee River, Fernley once beckoned as a quiet, affordable escape for families and workers priced out of Reno's skyrocketing market. With its small-town charm and proximity to major employers like Tesla's Gigafactory, it seemed like a sure bet for steady growth. But in 2025, Fernley's real estate market is stumbling like a weary desert traveler, with cracks widening by the day. From economic volatility to infrastructure woes, this northern Nevada city is facing a housing correction that's scaring off buyers. Let's unpack why Fernley's market is faltering and why it's a risky place to invest right now. Fernley's economy leans heavily on logistics, manufacturing, and retail, with a median household income of $58,000, below Nevada's $65,000 average. During the 2020 to 2023 housing boom, median home prices surged 60% to $390,000, driven by Reno commuters and investors betting on industrial growth. In 2025, prices have dropped to $345,000, an 11.5% decline per local MLS data. Inventory has ballooned by 58%, with 1,000 active listings compared to 630 in 2023. Homes now linger for 82 days on average, a sharp rise from 21 days during the boom. Infrastructure strains are a major hurdle. Fernley's rapid growth has outpaced its roads and utilities, leading to traffic congestion and spotty services. Nevada's water scarcity crisis is hitting hard, with new developments facing utility hookup fees as high as $25,000. Homeowners' insurance premiums have soared 43% since 2022, averaging $4,400 annually due to wildfire risks and extreme summer heat that drives cooling costs to $330 monthly. Property taxes at 0.8% of home value add $2,800 yearly for a $345,000 home, pinching locals with modest incomes. The investor retreat is worsening the slump. Fernley's proximity to Reno made it a rental hotspot, but a 14% drop in short-term rental demand in 2024, combined with stricter regulations, has sparked a sell-off. About 23% of listings are investor-owned, many priced below purchase value, flooding the market. Pending sales are shaky, with 24% of deals collapsing due to financing issues or buyer caution. Fernley's affordability and industrial promise still draw some, but its housing market is reeling from oversupply, infrastructure lags, and economic dependence on nearby Reno. Number 7. Winnemucca. Imagine a rugged Nevada town where wide-open plains meet a gritty frontier spirit, drawing those who crave solitude and affordability. Winnemucca, a hub for mining and ranching in northern Nevada, once offered a quiet escape with homes priced far below urban centers. But in 2025, Winnemucca's real estate market is buckling like a rickety old mineshaft, with prices dropping and inventories piling up. Economic volatility and environmental challenges are turning this rural outpost into a risky bet for buyers. Let's dig into why Winnemucca's housing market is crumbling and why caution is critical. Winnemucca's economy is anchored by gold mining, agriculture, and some tourism, with a median household income of $54,000, trailing Nevada's $65,000 average. During the 2020 to 2023 housing boom, median home prices climbed 50% to $330,000, fueled by investors and remote workers seeking low-cost living. In 2025, prices have fallen to $295,000, a 10.6% drop per local MLS data. Inventory has surged 60% year-over-year, with 800 active listings compared to 500 in 2023. Homes now sit unsold for 78 days on average, up from 23 days during the market's peak. Economic volatility is a key driver. The mining industry, while lucrative, is cyclical, and a 2024 dip in gold prices has led to job cuts hitting local incomes. Limited job diversity outside mining and ranching makes it tough for residents to afford homes, especially with interest rates near 7%, pushing monthly payments for a $295,000 home to $2,100. Homeowners' insurance premiums have spiked 41% since 2022, averaging $4,100 annually due to wildfire risks and extreme temperatures that swing from 100-degree Fahrenheit summers to freezing winters, driving utility costs to $300 monthly. Property taxes at 0.8% of home value add $2,400 yearly, straining budgets further. Investors are pulling back fast. Winnemucca's small short-term rental market catering to travelers along I-80 has seen a 13% drop in demand in 2024, prompting a sell-off. About 20% of listings are investor-owned, many at a loss, flooding the market. Pending sales are faltering, with 22% of deals collapsing due to financing hurdles or buyer hesitancy. Winnemucca's rugged charm and low prices still appeal to some, but its housing market is reeling from economic swings, rising costs, and oversupply. Number 6. Elko. Elko, a bustling hub in Nevada's gold country, once glittered with promise as a haven for miners, ranchers, and those seeking affordable living far from urban sprawl. Known for its cowboy culture and annual poetry gatherings, this northern Nevada city seemed like a safe bet for steady real estate growth. But in 2025, Elko's housing market is crumbling faster than an old mine tunnel, with prices sliding and inventories piling up. Economic swings and environmental pressures are turning this once steady market into a risky venture. Let's dive into why Elko's real estate is faltering and why buyers should proceed with caution. Elko's economy revolves around gold mining, ranching, and some tourism, with a median household income of $57,000 below Nevada's $65,000 average. During the 2020 to 2023 housing boom, median home prices soared 55% to $360,000, driven by demand from mining workers and investors eyeing rental opportunities. In 2025, prices have dropped to $320,000, an 11.1% decline per local MLS data. Inventory has surged 62%, with 950 active listings compared to 580 in 2023. Homes now linger for 80 days on average, up from 20 days during the boom. The mining industry's volatility is a major factor. A 2024 dip in gold prices triggered layoffs and reduced hiring, hitting local incomes hard. With limited job diversity outside mining and agriculture, affordability is slipping, especially with interest rates near 7%, pushing monthly payments for a $320,000 home to $2,300. Homeowners' insurance premiums have jumped 43% since 2022, averaging $4,300 annually due to wildfire risks, and extreme weather summers hit 95-degree Fahrenheit, while winters drop below 0-degree Fahrenheit, driving heating and cooling. Costs to $320 monthly. Property taxes at 0.8% of home value add $2,600 yearly, further straining budgets. Investors are also retreating. Elko's short-term rental market catering to tourists visiting nearby Ruby Mountains has seen a 14% drop in bookings in 2024, prompting a sell-off. About 22% of listings are investor-owned, many priced below purchase value, flooding the market. Pending sales are shaky, with 24% of deals falling through due to financing issues or buyer caution. Elko's cowboy charm and natural beauty still draw some, but its housing market is buckling under economic uncertainty, rising costs, and oversupply. Asterisk. Number 5. Carson City. Carson City, Nevada's historic capital, once charmed buyers with its quaint downtown proximity to Lake Tahoe and a quieter alternative to Reno's hustle. Nestled against the Sierra Nevada, it promised affordable homes and a small-town vibe with big city access. But in 2025, Carson City's real estate market is cracking like a fault line, with prices sliding and inventories swelling. Economic stagnation, rising costs, and environmental pressures are turning this capital into a risky bet for homebuyers. Let's unpack why Carson City's housing market is faltering and why you might want to hold off on buying here. Carson City's economy leans on government jobs, tourism, and some manufacturing, with a median household income of $60,000 below Nevada's $65,000 average. During the 2020 to 2023 housing boom, median home prices surged 60% to $480,000, driven by retirees, remote workers, and investors seeking proximity to Reno and Tahoe. In 2025, prices have dropped to $425,000, an 11.5% decline per local MLS data. Inventory has ballooned by 65%, with 1,200 active listings compared to 730 in 2023. Homes now sit unsold for 85 days on average, up from 19 days during the market's peak. Economic challenges are a key driver. While government jobs provide stability, Carson City lacks diverse, high-paying opportunities, and a slowdown in tourism, down 12% in 2024 due to reduced Tahoe visitors, has hurt local businesses. Rising interest rates near 7% push monthly mortgage payments for a $425,000 home to $3,000 a stretch for locals. Homeowners' insurance premiums have soared 45% since 2022, averaging $4,700 annually, driven by wildfire risks in the surrounding Sierra foothills and extreme summer heat that spikes cooling costs $350 monthly. Property taxes at 0.8% of home value add $3,400 yearly, eroding affordability. The investor pullback is intensifying the slump. Carson City's short-term rental market, once boosted by Tahoe's overflow, has seen a 15% drop in bookings in 2024, prompting a sell-off. About 25% of listings are investor-owned, many listed at a loss, flooding the market. Pending sales are crumbling, with 25% of deals falling through due to stricter lending standards or buyer hesitancy. Carson City's historic charm and mountain view still captivate, but its housing market is reeling from limited economic growth, rising costs, and oversupply. Asterisk. Number 4. Sparks. Sparks, a vibrant neighbor to Reno, once buzzed with energy as a haven for families, tech workers, and retirees chasing Nevada's affordable urban lifestyle. With its proximity to Tesla's Gigafactory and a growing art scene, Sparks seemed poised for endless real estate growth. But in 2025, this city's housing market is sputtering like a stalled engine, with prices dropping and inventories piling up faster than rush-hour traffic. From overbuilding to economic headwinds, Sparks is facing a correction that makes it a risky bet for buyers. Let's dive into why this once-hot market is cooling fast. Sparks' economy thrives on logistics, manufacturing, and tech, with a median household income of $62,000, just below Nevada's $65,000 average. During the 2020 to 2023 housing boom, median home prices soared 65% to $475,000, fueled by Reno's spillover demand and investors eyeing rental opportunities. In 2025, prices have slid to $420,000, an 11.6% decline per local MLS data. Inventory has surged 68%, with 1,400 active listings compared to 830 in 2023. Homes now linger for 88 days on average, up from 18 days during the boom. Overbuilding is a major culprit. Developers flooded Sparks with new subdivisions, banking on continued growth from Reno's tech boom, but demand has faltered. Entire neighborhoods sit half-empty, with for-sale signs dotting streets. Rising interest rates near 7% push monthly mortgage payments for a $420,000 home to $2,900, a challenge for locals. When paired with property taxes of $3,400 annually, 0.8% of home value. 5. Homeowners' insurance premiums have spiked 46% since 2022, averaging $4,600 annually due to wildfire risks in nearby hills and summer heat that drives cooling costs to $340 monthly. The investor exodus is adding fuel to the fire. Sparks' short-term rental market, boosted by Reno's tourism, has seen a 14% drop in bookings in 2024, prompting a sell-off. Nearly 26% of listings are investor-owned, many priced below purchase value, flooding the market. Pending sales are shaky, with 26% of deals collapsing due to financing hurdles or buyer caution. Sparks' urban energy and tech proximity still shine, but its housing market is buckling under oversupply, rising costs, and fading investor confidence. Up next, a city where environmental risks and economic shifts are fueling a real estate freefall. Any guesses? Asterisk. Number 3. North Las Vegas. North Las Vegas, a dynamic suburb just minutes from the dazzling Strip, once pulsed with promise as a hub for affordable homes and urban growth. Its sprawling neighborhoods and proximity to Las Vegas's jobs made it a magnet for families and investors alike. But in 2025, North Las Vegas's real estate market is crumbling faster than a house of cards in a desert windstorm. Overbuilding economic strains and fading buyer confidence are turning this once hot market into a risky gamble. Let's unpack why North Las Vegas is one of Nevada's most vulnerable housing markets right now. North Las Vegas's economy relies on logistics, retail, and service industries, with a median household income of $61,000, trailing Nevada's $65,000 average. During the 2020 to 2023 housing boom, median home prices skyrocketed 70% to $450,000, driven by demand from Las Vegas commuters and investors chasing rental profits. In 2025, prices have dropped to $395,000, a 12.2% decline per local MLS data. Inventory has exploded by 70%, with 2,200 active listings compared to 1,300 in 2023. Homes now sit unsold for 90 days, on average up from 17 days during the boom. Overbuilding is a key driver. Developers flooded North Las Vegas with new subdivisions, expecting relentless demand, but rising interest rates near 7% have priced out many buyers. Monthly mortgage payments for a $395,000 home now hit $2,800 a stretch for locals, when combined with property taxes of $3,200 annually, 0.8% of home value. Homeowners' insurance premiums have surged 48% since 2022, averaging $4,500 annually, driven by flood risks in low-lying areas and extreme summer heat that pushes cooling costs to $350 monthly. The investor retreat is worsening the slump. North Las Vegas was a hotspot for short-term rentals fueled by Vegas tourism, but a 15% drop in bookings in 2024, coupled with stricter regulations, has sparked a sell-off. Nearly 28% of listings are investor-owned, many listed at a loss, flooding the market. Pending sales are collapsing, with 27% of deals falling through due to financing hurdles, low appraisals, or buyer hesitancy. North Las Vegas's urban vibe and Vegas proximity still draw eyes, but its housing market is reeling from oversupply, rising costs, and economic uncertainty. Asterisk. Number 2, Henderson. Henderson, a polished gem just south of Las Vegas, once dazzled with its upscale neighborhoods, top-rated schools, and proximity to the Strip's glitz. Billed as a haven for families and professionals, it rode the wave of Nevada's housing boom with confidence. But in 2025, Henderson's real estate market is cracking like a desert mirage, with prices sliding and inventories swelling faster than a summer flash flood. From overzealous development to fading investor enthusiasm, this city's housing market is teetering on the edge. Let's dive into why Henderson is one of Nevada's riskiest real estate bets right now. Henderson's economy thrives on healthcare, retail, and tourism-related jobs, with a median household income of $64,000, just below Nevada's $65,000 average. During the 2020 to 2023 housing frenzy, median home prices soared 68% to $510,000, fueled by demand from Las Vegas professionals, retirees, and investors eyeing luxury rentals. In 2025, prices have dropped to $450,000, an 11.8% decline per local MLS data. Inventory has surged 65%, with 2,600 active listings compared to 1,600 in 2023. Homes now linger for 87 days on average, up from 18 days during the boom. Overbuilding is a major culprit. Developers blanketed Henderson with high-end communities, expecting endless demand from affluent buyers, but rising interest rates near 7% have cooled the market. Monthly mortgage payments for a $450,000 home now hit $3,100, a challenge for locals, when paired with property taxes of $3,600 annually, 0.8% of home value. Henderson's homeowners' insurance premiums have spiked 47% since 2022, averaging $4,800 annually, driven by flood risks in certain areas and extreme summer heat that pushes cooling costs to $360 monthly. The investor pullback is intensifying the slump. Henderson's short-term rental market, once thriving due to its proximity to Las Vegas's entertainment hub, has seen a 16% drop in bookings in 2024, prompting a sell-off. Nearly 29% of listings are investor-owned, many priced below purchase value, flooding the market. Pending sales are faltering, with 28% of deals collapsing due to stricter lending standards, low appraisals, or buyer caution. Henderson's upscale charm and vibrant community still shine, but its housing market is buckling under oversupply, rising costs, and waning investor confidence. Asterisk, asterisk. Number 1. Las Vegas. Las Vegas, the glittering heart of Nevada, once dazzled with its promise of affordable homes, booming jobs, and a lifestyle drenched in neon and opportunity. From sprawling suburbs to luxury condos, it was a real estate jackpot for buyers and investors alike. But in 2025, Las Vegas's housing market is crashing harder than a high roller's losing streak, claiming the top spot as Nevada's most vulnerable market. Overbuilding, economic swings, and environmental pressures are turning the Strip's backyard into a risky bet. Let's unpack why Sin City's real estate is folding and why buyers should steer clear. Las Vegas's economy thrives on tourism, gaming, and hospitality, with a median household income of $61,000, trailing Nevada's $65,000 average. During the 2020 to 2023 housing boom, median home prices skyrocketed 75% to $485,000, fueled by out-of-state buyers, remote workers, and investors chasing rental profits. In 2025, prices have plunged to $425,000, a 12.4% drop per local MLS data. Inventory has exploded 70%, with 7,500 active listings, compared to 4,400 in 2023. Homes now linger for 90 days on average, up from 16 days during the boom. Overbuilding is the biggest driver. Developers flooded Las Vegas with new subdivisions and high-rise condos, expecting endless demand. But a tourism slowdown, down 15% in 2024 due to economic uncertainty, has gutted buyer interest. Rising interest rates near 7% push monthly mortgage payments for a $425,000 home to $3,000 a stretch for locals, when paired with property taxes of $3,400 annually, 0.8% of home value. Homeowners' insurance premiums have soared 50% since 2022, averaging $4,900 annually, driven by flood risks and extreme summer heat that spikes cooling costs to $400 monthly. The investor exodus is catastrophic. Las Vegas's short-term rental market, once a goldmine for Airbnb hosts, has seen a 17% drop in bookings in 2024, coupled with stricter regulations. Nearly 30% of listings are investor-owned, many listed at a loss, flooding the market. Pending sales are collapsing, with 29% of deals falling through due to financing hurdles or buyer caution. Las Vegas's neon allure remains, but its housing market is reeling from oversupply, economic reliance on tourism, and rising costs. What's your take on these crashing markets? Drop a comment and subscribe for more real estate insights. Nevada's housing markets, from Las Vegas to Pahrump, are buckling in 2025 under oversupply, soaring costs, and fading investor confidence. These cities are risky bets for buyers right now. Do your research before jumping in, and let us know which market shocks you most. Subscribe for more updates. Asterisk, asterisk.